We've got Mukund Vasudevan, the MD, now joining in. And I want to start off by talking about that muted revenue growth. What has led to this decline? Is it a one-off? Will it continue?
Yeah, great question. I'd say the top line has been a little muted, but this is due to conscious decisions. There are various contributing factors to this. Number one was that we actually pruned some customers who were not so profitable, especially in the wind and some in the railways areas. We walked away from some orders, from some projects. The second is elections, which slowed down our aftermarket business, and in some areas where the investments were postponed, that slowed down shifted out our orders. Last but not the least, I just want to mention that our long-term trajectory is not changing. This is one quarter, and long-term, if you see, we have grown consistently at double-digit growths over the last 5 years. In one quarter, we have taken conscious decisions to kind of say, how do we grow more profitably rather than just grow.
Vasudevan, what's the outlook on your margins right now? Would you see improvement towards the 18 to 19% range in the next few quarters? Are you confident of that? And if yes, what exactly will be driving that growth?
So, the margins, we typically don't give outlooks for the full year, but we hope to continue to improve our margins. This will be driven by localization of our products, meaning we manufacture more locally. Today, we manufacture around 60+% of our products locally. Over the next 2 years, we intend to take that up to 70-75%. The second is continue our actions on walking away from projects which are not profitable or product lines which are not that profitable. And last but not the least, continuous improvement in our manufacturing, in our supply chains. That is a business as usual, but also continuously creates improvements. So going forward, you should see 18 or so percent sustained or improved.
So what is the outlook on export demand, and are you aiming to increase export revenue contribution, and also any diversification plans into the new geographies?
So our current export volumes is around 9%, and from SKF India. We continue to explore a lot of opportunities to export from here to the rest of Southeast Asia and Australia. For the other regions, which is Europe and Americas, we sell to our parent entity who takes on the sales. Those become the sales unit. And for that, we have to be competitive. We have to be competitive in a global supply chain, whether the product comes from China or India or Eastern Europe or locally. We have to be competitive, and we continue to make the investments to make ourselves more competitive. We continue to fight the internal battle also, so if you may, right, with our parent company, to make sure that we are a preferred supplier. And we will continue to explore opportunities to increase exports. Going forward, I continue to see more focus on India. There is enough demand here, enough opportunities for us to grow share here. But as the opportunity comes up, we will not walk away from any of the export opportunities.
And what is the outlook on the industrial segment order book?
The order book is looking very strong. We continue to see great demand from the infrastructure-led industries, which is the heavy industry, metals, cement, mining. All these are very strong. We continue to see some uptake in demand from both railways and wind. And then the aftermarket, which is more general, is continuing to show steady growth. I would say the big sectors are infrastructure-led, which is what I mentioned initially, which is metals, mining, cement, steel, so on.
Right. Can you also talk to us about the pressure, the decline which we are witnessing in your auto segment? By when do you expect recovery over there, and how will be the trend shaping up in the next few quarters?
Auto segment, I think there are pockets which have done well. We're actually seeing decent growth. It's not as much growth as the last quarter, but that is primarily due to elections. In the auto segment, we've seen really good growth from the two-wheeler and tractor segment. Commercial vehicle has been muted, partly because, again, elections, partly because the demand for commercial vehicles in general has been low, given some of the commercial vehicle policies which have been launched. So it's been muted there. We're also seeing good demand increase in the EV segment from both two-wheelers and four-wheelers.
You said earlier that you are aiming to increase market share in select key segments like railways, e-powertrains, electric vehicles, mining, etc. How can you add some more color to this? What strategy are you implementing and what is the targeted market share in these?
Okay. So our strategies are our strategy is essentially to focus on areas where we clearly have strengths and where we ensure we can add value to the customer over and above maybe some of our competitors can. So just as an example, within railways, we are much stronger in the high speed or the Vande Bharat kind of trains. And for there, we tend to have much higher market share. I think in some areas, we have at as much as 60% market share in the high speed trains. Similarly, in the automotive market, our strength tends to lie more with two-wheelers and with tractors. There we have a very strong product development strategy with our partners, our OEM partners. We start at a very early stage when they think about launching a new product and work with them to design products. And this might be bearings, it might be seals, it might be housings around the bearings to make it lighter, to make it more ergonomic in terms of space occupied, to make it less friction. All these are important things. So we design products specifically for them. Similarly, in the heavy industry, there are pockets where we are strong, and we continue to focus on those, develop products with our OEM partners or the end customers. The other element is we are looking very heavily at services. So this is IoT devices. These are connected devices, remotely connected devices, which measure bearing performance, noise, vibration, friction, etc., and predict failure before it will happen. This helps some of our larger infrastructure customers, like a steel plant, predict failure before it will happen, and that reduces their downtime. So a lot of focus on services and remote monitoring.
Thank you for joining in. Good to have you on board. That's the word coming in from the management of SKF, talking about how they are exploring avenues in West and South Asia. And as of now, they are looking at good demand in two-wheeler and in the tractor segment.
If you like this video, then like, share and subscribe to ET Now.